Hello, everyone. Welcome back to the RationalInvestor.com's daily brief recap. Always an adventure with YouTube. Let's see whether this thing's actually recording or not. Daily brief recap. Looks like we are. Yay! So this is our recap for our 1 hour show that we do on the site every morning. Daily brief. And of course, today I had the great privilege, lots of fun, to talk about what does a failed trade look like. Woohoo, way to go. But, at least I want to, at the very least, be a demonstrator of best practices. So, I have my journal as a public document on the site. Walk through sort of the rationale of why I wanted to take my shot. Started to nibble away. Got about 3/5 of my desired position on. Market started to erode and break down. We did enjoy a nice counter trend rally that was suggesting that the bull had a shot. But as you can clearly see, the market failed, and I had to exit and basically walked away when I was appropriately told to do so. So I have been touting the idea of taking a long shot against these lows on the anticipation of trend continuation higher, this kind of thinking, but that's simply off the table now. We will talk about that a little bit more when we get to it, but I just want to start off the video with what was Brian's day with the community like? Well, had to walk through my reasoning behind why I wanted to take this trade to begin with, and then what happens when the market basically proves that your thesis is wrong. So, in essence, walked away from the position and back on the sidelines just watching for the time being. And our little chart deck here to sort of give you a summary of what the conversation was all about at TRI today. We talked a little bit, yesterday with you guys about how I think there is a defined trading range on the U.S. dollar right now. Top of the range, bottom of the range, pretty wide. Did notice Kevin and I were having an interesting conversation today about the Mexican peso. And how people don't really seem to be talking too much about the peso anymore. And if we zoom out, it's really interesting consolidation in price developing. And for those people that are interested in spreads, this is probably a really good example of where you could probably put on a straddle and just simply trade the break of this current trading range, whichever way it breaks. You take the trade off in the other direction. So, you might think about like buying like a 1-year leap call option up here and a 1-year leap put option down here. And if we do W out here and break out, which, they're starting to see some interesting anecdotal signs, then you just take the put off and ride the call. And if we M out here and break down, you got a relatively small trading range. In fact, we even reviewed the idea of putting on the straddle even through here and just simply trading this range. And so in this particular case, it looks like the bull's carrying the day. So, if we close the day out here, you take the put off and you just ride the call and see where it takes you. So interesting, and I kind of thought that, okay, maybe this is a function of money flowing directly into North America, out of Europe, that kind of thing. But then I looked at the Canadian dollar, and the Canadian dollar actually looks like it's floundering a bit here today. And that thesis kind of came off the table, but in essence, you can sort of see that same conversation, where even the Canadian dollar now is sort of setting up basically a pretty wide trading range. And we had been talking about this on the Australian dollar recently as well. I'm interested in hunting long setups here. But Canadian dollar is under pressure today, and so I was kind of asking myself, well, why is it a function of money flowing out of North America, or Canada just sucks, or is it maybe commodities in general are seeing outflows? And I also pulled up the Australian dollar. Remember, we've been talking about this one recently. And I noticed that it's actually gone and M'd out here just over the short term. So same sort of thing, trading range. And I did a write-up on the Australian dollar recently. Got all excited because of this massive, like this is a 9-year slide in the Aussie, and then this itself is just a 2-year slide. And options didn't line up for appropriate trades at this breakout level. But I'm going to be watching really closely how those options prices are when we get back down into these areas. But I think what's happening here, looking at this, and like I said, I think that on balance, money is flowing back into North America. Econs of late have come out pretty well. But the commodity currencies, specifically Canadian dollar, Australian dollar, those kind of things, they're under pressure because the commodities are under heavy pressure here right now. Risk on, risk off conversation. We kind of talked about that at length recently. Gold, bonds, yen, all still pointing lower. Stocks and oil have not broken down. This oil's been all over the map here today. At one point today when I woke up, it was down here. Then when I did the daily brief, it was up here. Now it's back to sort of flatlining. Stocks, and we've talked about stocks at length recently, being right up at the top end of their ranges. We said that there really wasn't a sell signal out of this, and you can see this is just chop Vegas, but here we are right back up against that channel top. And of course, you look at the price chart and you go, oh my goodness, this is starting to look like gold looked like 6 months ago. So could we use some backfilling here? Sure, absolutely. It's just exactly what is the catalyst that starts the selling. I'm not exactly aware. As you can see from my little dots, I actually still have my insurance policy on the books, but I'm not really too interested in taking that off. It's supposed to be an insurance policy good through till the end of March, so I'm just going to let that work. Stocks are trying to sort of stabilize here after the pullback. But this is messy action. I got nothing there to work with. It's too late to be a buyer of that, and too early to be a seller. When we look at the ES, there isn't any signs of failure here yet, but like that SPY chart just looks like chop Vegas. Then we talked about the oil there just a few minutes ago on the line chart. You can see it is on an uptick right now. But this is the USO, the ETF. And you can see trend is higher highs and higher lows. So no real signs of failure yet here. But, and interesting how the ES still has that cheeky little gap there at about 295-ish area. The oil ETF has a ton of gaps all the way down here. So, at any point in time when they decide to pull the plug on risk, I could easily see there's lots of room for both of these assets to come back down. As we said, risk off proxies, bonds, basically down at the bottom end of the range. And if stocks are still strong, then it makes sense why bonds are weak. And then, of course, gold, like we talked about, and maybe a function of sort of commodity currency weakness as well. The gold itself, there just isn't any bottom here. Market smiling at you, all that kind of talk. It's interesting, we had a fundamental presentation back at the beginning of the week, or maybe it was last week, I can't remember. But the pharmaceutical stocks seem to be just absolutely on fire here, and here's two examples of pharma stocks that we have on the books. And I just wanted to sort of point them out to you guys. Hopefully everybody can see this Teva. And whenever we think Teva, you should think... That goes out for Kevin. Now he's going to have that song in his head all day. Teva, Teva, Teva. I was actually wondering what was driving Teva down. I was just having fun there. Sure hope I didn't get into trouble with YouTube over that. Big slide. Their earnings are actually coming out relatively soon. I don't think they've actually been... darn, I don't know how to do this. I thought you could go show earnings on this. Oh, well. Some of these charts show it, some don't. It drives it crazy. Oh, isn't that weird? Anyway, I do have one chart that showed, they've got earnings coming up here. You can see the big gap up top here. So, weekly W's. Keep in mind, this is a weekly price chart. Is there room for this thing to run up? I think so. It looks like a pretty good trade. So I'm feeling pretty good about being in that bad boy. And then, of course, our KPTI. This thing's just crazy. It's interesting to see how KPTI is coming up against an interesting technical level here. You don't really see it on the weekly charts, but if we go back to the daily charts, you can see there is a big old gap. That is actually, they are in the process of filling that in as we speak here. So, nice to see. You can see the weekly W here. Hopefully you understand the logic of why Brian's long. So there are bright spots in this market. And I do notice, we are very interested in pharmaceutical names on the site. We do have a bunch of them on the books. And, of course, we're trading them. So, it's one bright area of the market that I'm really interested in right now. For whatever it's worth, you live by the sword, die by the sword, as I sort of said earlier. Bitcoin went through a key level for me, confirmed, what I'm worried about here for Bitcoin, is we actually confirmed like weekly failure bars here. My whole thesis of crypto and Bitcoin was if I was going to trade this, I wanted to see if I could sneak in and this inside bar would hold. And it didn't, so I was politely told to exit. But we did spend a lot of time in the daily brief this morning talking about like lower time frame traders. Lower time frame traders, this is such a big range that you might very easily get things like El Tangonators actually setting up off of these bottoms, just looking for nothing more than 50% retracement dead cat bounces. So there are a couple OGs on the site that are actually hunting long setups through this W here off of like lower time frame. But for me, unfortunately, I like to trade with the trend. It's just me. And I've got now the hourlies and the 4 hours pointing down. As we showed you, the weekly is looking awfully dangerous here. These support lines, you can see them all these recent lows. They've all been broken. That's been a pretty darn big drop. Basically about $1,000. And we've been sort of talking on the site that kind of like that principle of the market rallies back up to test the underside and give institutions the opportunity to short at appropriate levels. I could very easily see that happen here as well. So notice, especially candle body lows, right? If I was going to short this, and keep in mind that's a pretty well-defined M top in there now, eh? What are we supposed to think if we see the market smiling at us? Well, that's not good. So, with that staring me in the face, it's very difficult for me to be thinking long right now. But, like I said, we do have people on the site that trade lower time frame setups. And you can see that just even if we get a 50% bounce, that takes us into that moving average resistance. Takes us basically back against all these candle body lows. And anybody who did want to short this market structure, that counter trend rally gives them that opportunity. I'm not going to be participating in that trade. Like I said, higher time frames, things are looking kind of dicey for me right now. But I could completely understand that move. And interestingly enough, right, because basically my plan was to, where is that chart? Yeah, well, this is a good illustration. My plan was to risk against these lows. Interestingly enough, on OKCoin, it actually gave me a very polite little exit off of that OKCoin trade. So I acted appropriately. But you can see where I exited and the market went further down. Ironically enough, my hunch is the dead cat bounce actually brings us basically right back to where I exited the trade. That wouldn't surprise me at all. Short-term momentum studies like things like RSI. Had a really good conversation with the site peeps about, The 50 line, the significance of bullish resolution, i.e. W's through that. How we did W out here, but once we got up to this original trend line structure and the 50 line, we totally crapped out and just puked right out. We already had many M's already working here, including this big yellow ugly one. So this line, the purple, represents sort of what I like to call the wrecked line. In essence, when this is broken, the short trade's probably done. So you can see how we sort of came back up, rushed, and then failed, and then W'd out here. And I think you can make the argument that, the way I did here, this teal W stops the bear. I think on balance, that's basically what's happened here. So we can go boobity-boo and boobity-boo and say that the bear slide has been stopped for now. So we can put this on here. And really now it's a question of how do we act. We probably will see some resistance at this old low, and now actually, interestingly enough, the 30 line itself becomes resistance. And I wouldn't be surprised if, if we W out again, then we get, that second one, the yellow one, starts the bull, and that basically paints our rally back up to test basically where I got out and the original structural fail level. So that's sort of what I'm watching for right now. Huge wicks and tails. I love, trade setups that set up off of old candle body lows and in tails. I might be like drawing fibs off of just this small range and reload zones in those tails. That might be attractive to me. Also, too, it being Friday, through the weekend, usually, all the Chicago, New York boys, they're gone. The kids sort of take over. Also, it gives them the opportunity to sort of clean up this oversoldness. Keep in mind, RSI does not like being below 30. So I think that's sort of what's going forward. But, for the record, my sort of thesis of getting long and wanting to be long, that's back on the sidelines. And you can see how long this took to develop. So it didn't develop overnight. If there is going to be a new long setup for me to hunt, it's probably going to take some time for this thing to W out, etc. So as you can see, I've drawn some very fast lines off of things like Coinbase on the 10-minute. And you can see we've come to a bit of an apex here. And if we can accept back up, then I think, a rally up into 9,000 area I think is completely doable. So if you can take advantage of that information, there is a W there. If that's your trading plan, rock it. Also, too, watching this IPO in the banking sector very closely. Sitting now at 13 bucks. So actually it finished yesterday kind of crappy, but it is on an up day today. We'll see how this goes, and I'm going to keep a close eye on this going forward. And then just a couple comments on alts, and we've sort of been talking about the same theme recently, so nothing really new here. But BNB rallied back up against the top end of its range, and you can see fell out of bed with Bitcoin overnight. Testing the bottom end of its range, and interestingly enough for the range traders, we've been following this trade for a while. It's fascinating to see how this potentially could be a harmonic failure level. Those people that did take that PRZ setup there, they were in the money, then they were underwater, and now they're back in the money, and you can see we're testing against these lows again. So, no idea how this is going to play out, but if we do lose these lows, my hunch is 50%, and these guys getting paid probably works. And also, too, like I said just a moment ago off of this chart, if that does happen, then basically that carves out a big M on BNB, which I think is sort of more anecdotal evidence, kind of sort of validating what we're seeing out of Bitcoin, that, crypto's on pause right now. Names that I'm interested in, that I'm going to be hunting for W's, watching really closely. I really like this UBIC, so we'll see how that goes. It's just a reiteration of something that I saw yesterday. Not really a tout, just there it is. So there's your market. Sometimes you look like a genius banging out doubles, and the irony of it all is, yeah, I lost money on Bitcoin, but our little options trading plan is having a lot of fun in this market, and we got off a really nice, well, 2/3 of the position we sold. And I fully expect to see it work higher, but sometimes you look like an absolute genius. Sometimes you look like a big doofus. It's a trader's life. It's the way it goes. So, caveat emptor. I hope the information I've imparted on you guys helps. I'm just trying my best and being a trader, just doing my thing. Sometimes you win, sometimes you lose. The most important thing here, though, guys, that I think you can take away from all this is, when you're right, try to make sure that you get paid, double your money, that kind of stuff. When you're wrong, try and make sure that the losses are relatively limited. And then also, too, I think it's a good idea that ahead of the time, before you do anything in the market, just articulate what it is exactly that you're going to do. And then that way, you can hold yourself to account. Did you actually do what you said you're going to do? And ironically enough, when it comes to trading, that's a real, real challenge for a lot of people. So, there's your summary. Hope you got some value out of that. Hopefully gave you some ideas to think about. Looks like the Bitcoin's enjoying that counter trend rally. So, caveat emptor, all the best. Have yourselves a great day. And the only thing left for good O'Brien to say at this point is bye for now.